towards commercial mining for the private sector. Now, we understand that Cabinet may allow sale of 25% of surplus coal in the open market after the said company has utilized the captive coal which it has bid for in the auction. Now, this is coming at a time when last three to four rounds of coal block auction have been cancelled. Now, how will it happen? Now, 25% of surplus coal sale will be for the auction mines for the private companies. This is basically to bring in increased coal production because we have imported over 180 million tons in this financial year alone. And this is also to attract investment and bring in private companies' participation and enhance coal production and basically increase plant load factor for the power plants which are struggling. Now, we also understand that government may put in additional premium for the sale of coal in the open market. We'll have to see how exactly the rules for this surplus coal selling of 25% will pan out for the private sector. But this is a small step towards opening up commercial mining for the private sector in India. Back to you.
All right, Anshu, thanks very much. Yes, that has been the long-awaited promise of the government. Maybe this could be the first baby steps being taken towards it. Let's move on now. As we were telling you, the one stock that really soared in trade today was Emami. Promoters have divested 10% of their stake in the company. Anisha has all the details. The market heaving a sigh of relief, perhaps that this money is going to be used to pare down debt and pay off their creditors, perhaps, Anisha?
Oh, well, yes, Surbhi, and given the environment wherein we are seeing a lot of corporate governance issues right from DHFL to Kaveri Seeds, the street is definitely giving a thumbs up to the management here, owning up that maybe they have over-leveraged and put in the money in some of the ventures like power as well as, cement assets. And that's why they're now looking to pare down their own stake in the company and raise around 1,600 crore rupees. That will be used to bring down the debt as well as manage the liquidity and funding constraints that the company is facing. Now, they have sold off this particular stake to a whole host of mutual funds and institutional investors like SBI Mutual Fund, L&T Mutual Fund, IDFC, etc. And now the promoter stake will come down to 62.7%. What is also street heaving a sigh about, a breather about, is the fact that it has been done at a current market price. So that also assuages, the investor concerns, and also the fact that the overhang of pledged shares, which has been plaguing a lot of stocks of late, also goes away. The brokerages are positive. Macquarie, for example, maintains a neutral call with a target price of 430, and the street definitely giving a thumbs up.
Okay, all right. Thank you, Anisha, for getting us all of those details on Emami. That was the stock in news today. Let's move on now. Sources suggest that Reliance Power has appointed JP Morgan as its banker as promoters are looking to sell some stake. Ritu is joining in on this interesting story. Ritu, we know what's happening with the group and they're looking at asset monetization, raising some cash. What is the latest with Reliance Power now?
Well, after the Anil Ambani Group reached a settlement with a majority of its lenders that, the pledged shares would not be invoked until the 30th of September this year, now the group is looking to pare some of that debt. And one of the steps that the Anil Ambani-led Reliance Group is looking to make is sell some of its stake in Reliance Power. Now, do remember the promoters directly hold about 30% stake in Reliance Power, and along with Reliance Infra, the total promoter holding, direct plus indirect, is a little over 70%. Now we're given to understand that Reliance Power has appointed JP Morgan as the banker to advise them in this transaction to sell the direct promoter stake to the extent of 18 to 19% of the 30% direct stake that is held by the promoters. Even after this stake sale, we're given to understand that the promoters will continue to hold majority or 51% stake in Reliance Power. Now, who could be the likely contenders? We're given to understand that Qatar Investment, ADIA, Blackstone, KKR and TPG are some of the investors that could likely participate in this. But of course, the final quantum of sum that will be raised is something that remains to be seen, because that will be important to pay these mutual funds and lenders that the company owes debt to prevent any further sale of pledged shares.
Absolutely. They've promised some of these mutual funds time that they will pay up in time, and the timeline is the 30th of September. And now Ritu is the expert of all things leverage and debt in our office. So let's move to the next story. What is happening with JP Infra and the resolution process here?
Well, you know, it's take two for JP Infra, and we'd reported last week that Suraksha Group and NBCC are the only two bidders that came forward to bid for JP Infratech. We're given to understand that at least the financial creditors favour NBCC over Suraksha Group, although the finer details of the bid have yet to be studied. Overall, you know, NBCC has made an upfront payment of 10,000 crore rupees to the lenders compared to Suraksha Group, which has only offered about 10 crores. But, NBCC is offering about 3,000 crore in lieu of the land that the company holds through a debt swap, whereas Suraksha Group is offering a higher amount at 5,000 crore rupees. In addition, we're given to understand that NBCC has also offered to raise fresh debt of 2,000 crore rupees, out of which about 1,000 crore rupees will be used to finish the project itself and give flats to the home buyers, and another 1,000 crore rupees will be used to repay the financial creditors. The time taken to complete the project will also be important, at least for the home buyers that are also now part of the committee of creditors. NBCC has offered to finish the project in 4 years compared to Suraksha Group that has offered to finish this in 3 years. Now, given that there are so many parts to this offer that both of the players have made, negotiations will continue between the lenders and the home buyers and these two bidders. And finally, financial creditors are hopeful that by the end of March is when they will be able to vote on the highest bidder. But what is also important is, as we've seen in the case of SR Steel, the promoters of JP Infratech, that is Jayaprakash Associates, have also made an offer to the lenders to withdraw the company from insolvency under Section 12(8) that allows the lenders, if 90% are in favour, to withdraw the company from insolvency before the commercial process has begun. Now, we do know that IBC norms currently do not allow so, but previous precedents in the case of SR Steel, for instance, which is still being heard by the courts could pave some way for the promoters to make this kind of a deal. It remains to be seen whether or not it will be accepted and how it will be tested in courts. But this is where things stand for JP Infratech.
Okay, all right. So the pot is still stirring. I think it's safe to say that. All right. Thanks, Ritu, very much for the latest details on that one.